The EV sector is entering a terrifying tipping point. We are all used to keeping track of the developments of the electric vehicle competition in 2021. Industry experts made significant advances, and new businesses created market history by making stunning purchasing and selling debuts. But now that the new year is underway, several experts expect that the gap and pace of the competition will be moderate. Bank of America analysts have released research stating that the EV market is on the verge of a tipping point. Companies like Tesla have a lot of concerns about one of these safeguards. Why experts predicted that EV tipping point would have a negative impact on Tesla, while in general, it would have a favorable impact for the EV sector. Increased conventional vehicle sales resulted from the chip shortage that caused delays in EV manufacture. But what will happen to the market once the EV tipping point is reached? Stay tuned to know the answer to these questions. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder, subscribing is free. Linking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. When it comes to the automobile sector, the continuing COVID-19 pandemic has had a mixed impact. Companies have been forced to perform bizarre things due to a lack of semiconductors. BMW, for example, has even omitted touch displays from some of its models as a means of navigating through the pandemic, while other manufacturers like General Motors have simply delivered less vehicles this year, abandoning its position as America's best-selling car maker to Toyota after 90 years of supremacy. As a result, a significant number of new vehicle purchasers have turned to the used car market, which has resulted in a shortage of available used automobiles on the market. However, as the global supply of chips and demand for automobiles both began to normalize, Cathie Wood, the Star Fund Manager and Chief Executive of ARK Invest, has said that the used vehicle market is expected to have potential losses because of price hikes in recent years. She predicted that the used vehicle industry will see a bloodbath, with values plummeting in this year and into the coming year as prices that had risen as a result of supply chain constraints and a spike in demand begin to decline. The billionaire made reference to conventional manufacturer Ford, which surpassed Tesla in the stock market, and said that the company is likely to post losses in the future. In light of multiple EVs that will be released in the near future from both old and new manufacturers, Bank of America securities analysts predict that the industry will reach its tipping point this year, while higher pricing will continue to be a hindrance. Several startup EV manufacturers are starting or speeding up the introduction of new products in 2022. While numerous conventional automakers are also commencing their product launch blitz in the same year. EV sales will be marketed in about 1 million units by the year 2022, with sales increasing to around 1.8 million in 2023 and 3 million in 2024. This implies that EV penetration will be approximately 6% this year, 11% in 2023, and 16% in 2024. However, although this may be excellent news for the EV industry as a whole, it is not good news for Tesla specifically. According to experts, market share for Tesla might plummet as low as 19% by 2024, from 69% in 2021. In the electric car industry, it is expected that Ford and General Motors would obtain the greatest amounts of market share. Tesla stock was in the greens, which is a welcome change of pace for investors and purchasers, after spending the better part of this week progressively down. The Bank of America report announcement, on the other hand, is not a positive development for the EV giants. This might be bad but at least some of the projections in the report aren't completely gloomy. It anticipates that EV gross sales will increase at faster rates than it was previously expected. Even though giants are expected to lose the majority of its market share by 2024, for the time being, it serves no purpose to believe that their stock will perform as badly. Every hot trade will eventually reach a tipping point. In fact, the study isn't wrong about that. Without a doubt, the electric vehicle industry may be set for a resurgence in the coming years. Gross sales are expected to rise sharply in 2022, and they are not expected to slow down until 2023. At the end of 2021, 71% of American consumers expressed interest in electric vehicles. Although this is genuine, it does not necessarily suggest that a large number of people will buy them. However, it does point to a future in which gross sales are expected to increase. By then, EV startups will have plenty of other assets that will help it maintain their dominant position in the automotive race. For Tesla, the possibility for significant market share loss seems to be the primary source of worry for the Bank of America group in relation to Tesla stock. Its reasoning, on the other hand, that Tesla would suffer such a dramatic decline as a consequence of emerging competition has some ambiguity. Yes, more electric vehicle companies such as Lucid, Rivian, and Chinese EV manufacturers are working tirelessly to compete with the Titan. That does not rule out the possibility of them taking a significant amount of market share away from the industry's leader. Clients who purchase Rivian's electric vans and SUVs will be a different breed of customer than those who purchase the luxury Lucid Air, whose clients will be different to those who purchase the Tesla's four-door sedans. Lucid will be the only other EV company that will provide Musk's business with any significant competition in terms of driving automobile sales in the near future. However, although Lucid's gleaming autos do a great deal to excite loyalty of customers, the company has been incredibly slow in bringing the much-anticipated Lucid Air to market. It will take time for the vehicle to get significant traction to begin to eat into Tesla's market share. While other companies such as Ford and Toyota are attempting to compete with Tesla, ardent electric vehicle enthusiasts will likely navigate towards the companies who have a reputation for EV innovation. If the Tesla Mannequin Y is stopped down because its production seems to be excessively ramped up, this may help Tesla maintain its advantage in deliveries. Furthermore, EV companies are now experiencing a trading environment in which production restrictions continue to be a threat. By exceeding Wall Street estimates with its 2021 Q4 delivery numbers, Tesla demonstrated that it is capable of keeping up with the pace of change in the market. It is possible that the firm is making work on the battery entrance. There are no plans to slow down after securing collaborations with companies in the battery materials industry. The company's strength offers it a significant advantage in this particular situation. Although it is possible that the electric vehicle industry could reach a tipping point, this is unlikely to be detrimental to EV giant stock prices. Some electric vehicle manufacturers may see difficulties in the next year, but Tesla is highly improbable to be one of them. The firm has successfully established itself at the forefront of the electric vehicle race, and it expects to stay there. However, the startup's future has never been more bright. The road to glory is set for the likes of Lucid and Rivian. Hedayat adds that everyone realizes that more miles on a single charge equals a better purchase, and that the chief engineer's previous expertise is extremely valuable. That should wrap things up for today. Keep in mind that subscription is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch.